The following information concerns a new revolutionary system which will help you to save thousands of dollars when consolidating your debt. We specialize in reducing your debt by thousands via debt consolidation. What is debt consolidation? Let's go over an example just to make sure you are applying for the right service. Debt consolidation is when, for example, you have 5 credit cards, 2 payday loans, and a personal line of credit. You have 8 separate payments throughout the month. Debt consolidation is when we combine your 8 monthly payments into one more manageable single payment. Our main objective is to lower your total payment, lower your interest rates, and reduce your debt by thousands by a minimum of 25% of what you owe your creditors. Our policy. First, we will show you how to reduce your unsecured debt, such as loans, credit cards, student loans, lines of credit, and payday loans, while reducing your debt by thousands of dollars when you use a private lender. Then, once you prove yourself by paying 6 consecutive payments to your unsecured debt consolidation loan, we will arrange it so your secured debt, such as car loans and mortgages, can be included in your debt consolidation loan. We do not consolidate loans you owe to friends and family. This system is the most easy to qualify for than any other system in the marketplace due to the revolutionary concept we work within. If you can prove your ability to pay back the loan, proving income and employment, then your approval is guaranteed. If you are a business owner, on a pension or government compensation who can prove income and the ability to pay back the loan, your approval is guaranteed. And if you have bad credit, no problem. When qualifying with our system, the type of debt you have is more important than your credit score. Why? After analyzing your debt load, if we are confident your creditor sold your debt, your approval is guaranteed. The 4 most common questions we are asked. 1. Does debt consolidation affect my credit in a negative way? No. Debt consolidation does not affect your credit in a negative way. Debt consolidation is often confused with consumer proposals. Consumer proposals affect your credit in a negative way, while debt consolidation does not. 2. What will my interest rate be? We guarantee that when using a private lender, the interest rate you are paying your present creditor will be reduced. A common misconception within the marketplace is that private lenders charge higher interest rates than the banks do. Considering credit card interest rates range between 17% to 34% compound interest, and payday loans are even higher, a private lender can easily beat these rates due to the fact that private lenders charge simple interest, not compound interest. On the homepage of our website, there is a segment of a video you can watch that shows in an entertaining way how expensive compound interest is compared to simple interest. In general, when dealing with a bank, they will quote you a rate with a take-it-or-leave-it attitude, allowing little to no room for you to negotiate. A private lender will inquire about your file once it is on our system. With the help of your representative, we will negotiate the terms and conditions and interest rate of your loans with the private lender. This will guarantee to receive a better rate than you are paying your present creditors. 3. Are there any upfront fees? No, there are no upfront fees or application fees. 4. If there are no upfront fees, how do you make your money? We do not make any money until we provide you a 25% discount off of what you owe your creditors. Our fee is the percentage of the negotiated discount over and above the 25% discount promised to you. Therefore, if we manage to obtain a 40% discount, we would make 15% while you retain and save the other 25%. The private lender is the one who pays our fee, which creates a win-win situation. Therefore, this is a free service to you. Keep in mind that if your debt is over $20,000, you can negotiate a larger discount than 25%. The rule of thumb is that the larger the amount owed to your creditors, the stronger your negotiation position is to get a larger discount from your new private lender. Now let's get into the premise that this new revolutionary concept works upon. Not many people know this, but debts are bought and sold every day. Your creditors have most likely sold your debt, but bear in mind that we are not referring to your creditors selling your debt to a collector. We are referring to the fact that within 3 weeks of you signing the loan contract, your creditor sold your debt to a third party. This is where a huge opportunity presents itself to reduce your debt by thousands while not affecting your credit. Do not be fooled. If your creditor is collecting payments, this does not prove that they own the debt. It simply proves that they are servicing the debt. Big difference. Servicing the debt means that once your creditor sells the debt, they continue to collect payments and provide statements, but they are no longer the rightful owners of the debt. They are now only servicing it. Legally, what does the bank or any lender have to produce to prove they are still the rightful owners of the debt? There are two major items your creditor must produce to prove they are the rightful owners of the debt. 1. Your creditor must locate the original wet ink signed loan document, not a photocopy, and prepare it for inspection. 2. Your creditor must produce a sworn affidavit by a chartered accountant verifying the debt was not sold and still appears on your creditor's accounting ledgers as an asset. Keep in mind, when your creditor cannot produce the aforementioned items, this is what allows you, together with your private lender, to negotiate a minimum 25% discount and release you from the high compound interest rate debt trap. The condition that must be satisfied by your creditors before you and the private lender will forward funds is very simply stated as follows. Please locate the original wet ink signed loan document, not a photocopy, and prepare for inspection accompanied by a sworn affidavit by a chartered accountant verifying the debt was not sold and still appears on the accounting ledgers as an asset. For your creditor to simply show you a photocopy of the contract you signed does not prove they are the rightful owners of the debt. The wet ink original contract you signed is the proof that they are still the rightful owners of the debt. For example, if you signed the original contract with blue ink, the contract your creditors produce to prove they are still the rightful owners of the debt must have your signature in blue ink. The original contract you signed, that has the blue ink on it, is the asset your creditor could have sold. If your creditor can produce only a photocopy of the contract you signed, it is not sufficient. A photocopy of the contract you signed is simply a picture of the asset. It does not prove that they still own the asset. A good analogy is, if you were going to buy a car from me, and it was time to hand over the funds to buy the car, and you asked me for proof of ownership of the vehicle, and I responded with, "I do not have it with me right now." Would you feel comfortable handing over the funds? Of course not, due to the fact that I cannot prove I am the rightful owner of the car. With that said, if your creditor can prove they are still the rightful owners of the debt, we simply pay them out in full. If they sold the debt, we just need to know who they sold it to, so we can deal with the rightful owner of the debt instead. If your creditor did sell your debt, they would have sold it to the world market, or in other words, they securitized the debt. When the world market resells the debt, the bank or the agent of the world market will not be able to produce the proper paperwork to prove who is in fact the rightful owner. Why? The bank will bundle 2,000 Canadian borrowers' loan contracts and sell them to the world market. The world market will in turn create asset-backed securities and sell the 2,000 loan documents to 10,000 investors. To sell 2,000 loans to 10,000 investors means they must have cut each loan contract into 5 pieces and sold those pieces individually. Therefore, asking any entity to produce proof of ownership of the debt is impossible once your debt has been securitized. We will be able to analyze your debt to tell you whether or not it was securitized, that is, sold to the world market, simply by filling out the secure application form here on our website. Here are only 2 of many ways to quickly check if your debt has been securitized, that is, sold to the world market. 1. Check your statements and/or paperwork pertaining to the debts you would like to reduce. If your name appears in all capital letters on any statements or paperwork pertaining to the loan, your creditors have most likely already sold the debt. Also, notice on your credit cards your name appears in all capital letters. 2. All credit card or loan agreements refer to the following. Your creditor may, without notice to you and without your consent, sell, transfer, pledge, or assign all or part of this agreement to any third party. This paraphrase, found within all credit card or loan agreements, proves your creditor was contemplating selling your debt to a third party from the date your contract was signed. How do we go about asking for proof of ownership of the debt? Once we find a private lender to fund your debt consolidation loan, you will be provided the first registered letter to send to your creditors. If they do not respond within 20 days, we send them the second registered letter. If they do not respond within 20 days to the second letter, we send them the third and final notice. If your creditors cannot produce proof of ownership of the debt within 20 days of receiving the third and final notice, legally, this is proof that your creditor is no longer the rightful owner of the debt. Once we have legal proof that your creditors are no longer the rightful owner of your debts, we package and send all communications to the credit bureau. The credit bureau will contact your creditors, informing them if they cannot prove they are still the rightful owners of the debt, they will be removed from the credit report as a creditor, as stated in Canadian legislation. Canadian legislation states clearly that all inaccurate information must be deleted from your credit report. Your creditors, who have sold your debt but still appear as creditors on your report, are by definition inaccurate information. In the financial industry, debts are assets that can be bought and sold. Therefore, before your new private lender will forward the funds, they need proof of ownership of the debt. When supplying you a debt consolidation loan, we are not creating a new loan for you. We are buying an existing loan, debt, or asset off of another company's books. The most important attributes the private lenders are looking for when qualifying borrowers for a debt consolidation loan is their ability to pay back the loan. Just as important, it is crucial that you, the borrower, understand the concept of asking for proof of ownership of the debt. Once you feel you understand this concept, please complete our secure application form and indicate you understand the concept of asking for proof of ownership of the debt. Once that indication is made and the form submitted, your file will be made available to many private lenders willing to consolidate your debts very quickly, while reducing your debt by thousands. If you still have questions, fill out the secure application form and indicate you still have questions regarding the concept of asking for proof of ownership of the debt. A friendly, professional representative will contact you to answer all your questions before proceeding. The last thing any of our lenders want is to be matched with a borrower who does not understand this concept and says something like, "Just give them the money. What does it matter?" Obviously, if it was your money and you were lending $20,000 to someone, you would want to make sure that you were lending the funds over to the correct entity. When you ask your creditor for proof of ownership of the debt but they cannot produce it, legally they cannot collect. This creates a huge opportunity to reduce your debt by thousands while not affecting your credit. Why does this not affect your credit? You are not negotiating due to not having the money to pay the creditors out. You are negotiating due to the fact that your creditor does not have the proper paperwork proving they are still the rightful owners of the debt. Really, at this point, you can see how the banks have no right to collect anything due to the fact if they sold the debt, they already got paid and no longer own the debt. Were we to forward them the funds, they would be paid twice. The truth of the matter is that the Canadian system is not ready to allow people to fully discharge their debts, but together with a private lender, negotiating a minimum 25% discount while being released from the compound interest trap while not affecting your credit report is a very realistic expectation. The same premise applies to collection agencies. Did the collection agency buy the debt or simply buy a file? Big difference. What collection agencies do is buy a file with your name, phone number, address, and employer. This is not buying a debt. If they bought the debt, they would be able to produce proof of ownership of the debt and the wet ink original contract you signed with your creditor in order to collect. This, in fact, would be the document or asset they purchased. If they merely bought the file, they have no legal grounds to collect. This can create a huge opportunity to reduce your debt by thousands while not affecting your credit. If the collector admits to not owning the debt, but is acting as an agent to collect, the collector must be able to prove their client, your creditor, still owns the debt. If the collector does not have proof their client, your creditor, is still the rightful owner of the debt, this is considered a lack of due diligence on the collector's part. This would mean the collector is acting upon the simple fact your creditor told them you owe them money. This is the same as you calling up a collector and simply telling them you are owed money by an entity and they start collecting simply on your word. Very unprofessional. The only entities allowed to ask a creditor for proof of ownership of the debt are you, the borrower, but only if you have the funds to pay out the loan in a lump sum payment, or a private lender who is providing a debt consolidation loan via purchasing the debt from your creditor. When you, the borrower, and a private lender ask for proof of ownership of the debt together, it is a very powerful combination. Furthermore, to solidify the fact that your creditors could have sold your debt, every one of your creditors in the loan or credit card agreement states they are contemplating selling the debt from the date the contract was signed. The following paraphrase can be found within each agreement you have signed with your creditors. Your creditor may, without notice to you and without your consent, sell, transfer, pledge, or assign all or part of this agreement to any third party. The above paraphrase found within the client agreement you signed with your creditor confirms your creditor could have sold your debt. The above paraphrase found within the client agreement proves your creditor was contemplating selling your debt to a third party from the date the contract was signed. Therefore, the documentation we are requesting is a very reasonable and simple request. Your creditor needs to prove they are currently the rightful owner of the debt, due to the fact debts are bought and sold every day, as implicated in the client agreement. Simply put, your creditor could have sold your debt, as implicated in the client agreement. Does the private lender give me the money to pay my creditors? When obtaining debt consolidation via a private lender, they will not give the client, you, the funds to pay out the creditor. The private lender is buying the debt or asset directly from the creditor, and therefore will be paying out your creditor in full directly. The private lender will pay your creditor directly once your creditor proves they are still the rightful owner of the debt. The cornerstone of this system. The cornerstone of this system, which allows you to save thousands of dollars while consolidating your debt, is due to the fact you are using a private lender instead of a bank. So why does this concept of asking for proof of ownership of the debt not work if you use a bank to consolidate your debt? If you did qualify for debt consolidation through a bank, one bank lending money to another bank is like your left hand lending money to your right hand, since all banks are part of the central banking system. This is where the big benefit comes in when using a private lender. The private lender is expected to ask for proof of ownership of the debt no matter who they are buying the debt from. Banks will not allow you to participate in the conveyance process, that is, the transfer of funds. Private lenders encourage their borrowers to participate in the conveyance process. This is how the discount is produced while releasing you from high compound interest rates. In the financial world, a debt is an asset. We all know assets can be bought and sold. When purchasing an asset, you must ask for proof of ownership of the asset before forwarding funds. Hence, it is a natural event to ask for proof of ownership of the debt when using a private lender. Both you and the private lender want to ensure that the funds reach the rightful owner of the debt. If the money is forwarded to the wrong entity, this will leave both you, the borrower, and the private lender in a compromising situation. The concepts we are addressing of buying and selling debt have been around for centuries. For centuries, private lenders would buy and sell each other's debt. Keep in mind, private lenders have existed much longer than banks. 1974 was the first time the banks were allowed to securitize your debt, or in other words, sell debt on the world market. The reason the general public has become more aware of this is because of the advancement of the Internet. Due to the advancement of communication via the Internet, private lenders and borrowers like you are just a click away. Therefore, we can help you find a private lender very quickly, who is expected to ask for proof of ownership of the debt as mentioned earlier. The fact that banks sell your debt has become mainstream news since 2008 due to the 2008 financial collapse. The reason for the financial collapse has been proven due to the fact that banks were selling the debt irresponsibly to the world market. Doing the research. Completing the research to confirm if the bank really does sell your debt or asset can be tricky. Keep in mind selling your debt is one of the banking industry's best-kept secrets. The bank will never admit, in promotional videos or information released to the public, that they sell your debt. Therefore, to help you further research this information, please click the Researching Securitization link in the menu of our site. The Canadian Rules of Court also back this concept. In the Canadian Rules of Court, in order to sue an entity, you must be an affected party. If the bank cannot prove they own the debt, they are no longer an affected party. A good example is, if you sold a house in June, and in September find out it was vandalized, can you sue the people who vandalized the house? No, because you are no longer an affected party. You no longer own the house. The same goes for the bank. If they sold the debt, They are no longer an affected party and have no legal right to sue. This premise also holds true when applied to the Credit Bureau. They are governed by provincial legislation, along with the Consumer Reporting Act. It states very clearly that the Credit Bureau must remove inaccurate information from your credit. Therefore, once we send the communication to the Credit Bureau that we had with your creditor, proving they cannot prove ownership of the debt, your creditor must be removed from your credit due to the fact that they are no longer, by definition, your creditor. For example, if you signed a loan agreement in February, and your creditor sold the debt in March, but you went delinquent on that debt in April, is the original creditor you signed the loan agreement with allowed to place a derogatory remark against your credit if they sold the debt? The answer is no, because they are no longer your creditor nor an affected party since they sold your debt. When completing this transaction, we must make sure we fulfill your contractual obligations to your present creditors. When executing this system, you inherently meet your contractual obligations. Your contractual obligations are as follows. At the end of each month, you either pay the monthly payment or pay out the loan in full. When paying out a loan, you, the borrower, can use your own funds or borrowed funds. You, the borrower, can either borrow the funds from a financial institution or a private lender. You have elected to borrow the funds from a private lender in this case. You, via the private lender, are now attempting to pay out the loan in full. Therefore, proof of ownership of the asset or debt must be provided in order for the loan to be paid out in a commercial transaction. If your creditor cannot come up with the proper paperwork to complete the transaction, why should you suffer? If you were expected to keep paying the creditor while they looked for proof of ownership of the debt, they would simply have no reason to produce proof of ownership of the debt due to the fact they are still getting paid. In essence, this would trap you into a high-interest loan while destroying the deal with your new private lender. Why would the private lender wait around without getting paid on his loan for months while the bank looks for documentation they no longer have? This is why, when obtaining a debt consolidation loan via a private lender, you must fully commit to the private lender in order to reduce your debt by thousands. The result is guaranteed lower rates, monthly payments, and reducing your debt by thousands while not affecting your credit. You may be thinking, wow, it can't get any better than reducing my debt by thousands while getting out of the high compound interest debt trap. But actually, it does get better when you take our referral program into consideration. Our referral program. Our referral program is second to none. It allows you to have months when you do not make payments. Once you sign a debt consolidation loan at a great interest rate and are very happy with all the above benefits you are receiving, when referring someone else who also signs a debt consolidation loan, their first payment goes towards your monthly payment. The saying, knowledge is power, is so true when dealing with your creditors. This is information every Canadian needs to be aware of. Now that you know your rights when it comes to dealing with your creditors, it allows for a feeling of empowerment, but knowing your rights is not enough. You need to exercise them. We are happy to show you how to exercise your rights, partnered with a private lender, while asking for proof of ownership of the debt, which will lead to reducing your debt by thousands of dollars. How do I start this new revolutionary system to reduce my debt by thousands? To be matched with a private lender, who is expected, together with you, to ask for proof of ownership of the debt, please complete our secure application form. You will find that form by clicking on the Apply Today link on our site's menu. You will also notice that we do not ask for your social insurance number or credit card numbers. Once you complete our secure application form, one of our professional, friendly associates will contact you to answer your questions. The simple information requested within the secure application will allow one of our experienced financiers to analyze your debts. They will then be able to decide which of your debts we can obtain a discount for. Once you click the Submit button, you will instantly be entered into our system and exposed to over 2,300 private lenders willing to lend you money at great rates, well below the banks, to reduce your debt by thousands. Complete our secure application form now to begin the process and reduce your debt. There will be 2,300 lenders viewing your file and ready to help within 24 hours. What to expect once you submit your secure application. In the beginning, it is a waiting game, and with patience it will pay off. You can expect a friendly, professional representative of the private lender to contact you within 14 days. At this point, a more specific estimate is not possible. This is due to the supply and demand of applicants and lenders within the marketplace. Once your file is on our system, We will assist you in negotiating a lower rate with a private lender than you are paying your present creditors. Now that you know the best-kept secret of the banks and have the keys to financial freedom in your hands, use them. Fill out our secure application form today.